Bitcoin is down, Coinbase stock is down even more. And right now, thousands of investors are looking at this stock thinking the same thing. Is this finally the dip to buy? Well, I suggest you don't buy Coinbase stock until you know these 5 things about the company. Because Coinbase is not just a crypto stock anymore. It's not just a Bitcoin proxy. And it's definitely not as simple as Bitcoin up, Coinbase up. There are 5 critical factors that decide whether this is a huge opportunity or value trap that could still fall another 30%. Most investors only look at the chart. Almost nobody looks at how the business actually makes money, how dependent it is still on retail speculation, and how its subscription revenue is changing the game, and also why this stock behaves like a leveraged crypto during every single cycle. By the end of this video, you will understand exactly what Coinbase really is, why it moves the way it does, and whether buying at these levels is bold or just simply reckless. I'm Daniel, a former London stockbroker and worked in finance for 10 plus years. I also publish stock market analysis to numerous investing websites, and in addition, I host one of the largest investor conferences every year in Central Europe. And if you want to see more videos like this, hit that subscribe button. Firstly, Coinbase today is not the same company it was a couple of years ago. That's the #1 mistake most investors make. The business have evolved and the revenue mix is shifting, and the current drop in crypto prices might be telling a different story than it did in 2022. Coinbase started out as a simple crypto exchange like Binance, Kraken, FTX, which went bankrupt anyways, and many others. But now, it's a completely different ballgame. Coinbase is essentially a regulated gateway into the crypto economy. It serves 3 main groups: consumers, institutions, and developers. Retail investors use it to buy and sell crypto through a simple interface or an advanced trading platform. Institutions use Coinbase Prime for trading, custody, and financing, and the company acts as a custodian for several major Bitcoin and Ethereum ETFs. So if you're buying a Bitcoin ETF or ETP, your Bitcoin might be held at Coinbase. Developers build a crypto-enabled product using Coinbase infrastructure, including its own blockchain network called Base. So this is no longer just a retail trading app, it is becoming a broader financial infrastructure company for digital assets. They have now 12 revenue streams, you heard right, 12, and each of them responsible for more than $100 million per year. The second point investors must understand is that the core revenue driver has historically been transaction fees and still is. When retail investors or institutions trade Bitcoin or Ethereum on Coinbase, they charge a fee. Simple trades carry higher fees, advanced trading is volume-based and cheaper, and institutions pay lower margins, but trade in larger size. This is why the company's earnings are so sensitive to crypto cycles. When Bitcoin rallies, volatility rises, trading volumes surge, and crypto-based revenue jump. When crypto enters a bear market, activity slows and revenue contracts quite quickly. That is the fundamental reason the stock is so cyclical. If we take a look at Coinbase's recent annual report, total trading volume rose from around $1.19 trillion to $1.22 trillion in 2025, a modest 3% increase. Consumers trading volume grew 7%, while institutional volume increased only 2%. So activity improved, but not explosively. The composition also shifted. Bitcoin shares of trading volume fell from 33% to 29%. Ethereum shares increased. USDT stablecoin activity dropped sharply after pricing changes, and because they are also moving away from USDT into USDC, which is the same asset, but it is issued by a regulated entity, Circle Internet Group. And other crypto assets also gained share. In other words, trading is becoming more diversified and less purely Bitcoin driven. I think the third major change investors must understand is Coinbase's shift towards institutions, which would have been unheard just a couple of years ago, but now is the new reality. Total transaction revenue increased from about $3.1 billion to $3.56 billion. but the split matters. Consumer transaction revenue slightly declined, while institutional transaction revenue soared, grew by 40%, partly driven by derivatives activity and the expansion of Coinbase's exchange offerings. Retail still remains the higher margin segment and the largest revenue, with almost 82% of the total revenue comes from consumers like you and me. However, this is down from 86% compared to last year, and this trend will very likely continue. By the end of 2026 or 2027, maybe around 1/4 of the company's revenue can come from big institutions. Why this matters, you can ask. Because when retail investors get scared, they sell everything and they panic. Institutions, on the other hand, are not. So this will have a knock-on effect on the stock price movement itself. And I also forecast that Coinbase's stock will be less volatile in the future due to this single change. The fourth thing investors must understand about the company is that this stage is not just here yet, and Coinbase is still massively cyclical. When crypto prices fall, assets on the platform fall. In a year, due to the downfall of crypto prices, the dollar amount of total assets on the platform fell by 7%. When volatility spikes, trading revenue jumps. But the business is gradually broadening. Trading volumes are more diversified now. Subscription revenue is growing faster than transaction revenue. And that shift matters because it reduces, slowly, not dramatically, the company's pure dependence on Bitcoin and Ethereum price movements. If you compare Coinbase to the S&P 500, the difference is obvious. The S&P 500 moves with economic growth and corporate earnings. Coinbase moves with crypto sentiment and volatility. Compared to Bitcoin, Coinbase often behaves like a high beta version of it, so it amplifies the Bitcoin movement at the moment. In strong bull markets, the stock can rise significantly more than Bitcoin. Well, in downturns, it can fall much harder. This is not because it simply holds crypto, but because its business model depends on its activity. Price moves create trading, and trading creates revenue. And here's why the fifth thing investors must understand is key. What's changing is the rise of subscription and services revenue. The company now has 12 major revenue sources. Coinbase now earns meaningful income from stablecoins like USDC. It earns staking commissions when consumers stake assets such as Ethereum through the platform. It earns custody fees from institutions holding crypto on the platform, and it also earns interest on custodial balances. On top of that, it offers Coinbase One, a subscription product which pricing tiers from €4.99, €19.99 and up to €1.99 per month, offering reduced fees, higher staking rewards and additional benefits. This is a recurring revenue, and recurring revenue behaves differently from pure trading spikes. That does not mean Coinbase is suddenly stable. It remains highly cyclical and heavily exposed to crypto prices, regulatory developments and competition. If Bitcoin drops further, the stock could easily fall another 20 or 30%. This is not a defense holding. It is a high volatility growth stock that tied to an emerging asset class. But the business is gradually diversifying. Stablecoin income depends partly on interest rates and adoption. Custody depends on assets under management, and subscription depends on user retention. Over time, that mix matters. At today's lower levels, the market is pricing in weaker crypto sentiment and softer trading volumes. Historically, the strongest returns in Coinbase have come from buying during pessimism, not euphoria. Just look back at 2022. For conservative investors who are building a broad European ETF portfolio or an MSCI World ETF, this is likely too volatile to be a core position. But for risk-tolerant investors who understand crypto cycles and can handle sharp downturns without panic selling, Coinbase at depressed valuations could offer great upside in the next bull phase. I believe that the key is position sizing and discipline. And if you want to see rational deep dives into companies sitting at the center of major financial shifts, subscribe to the channel and don't forget to hit that like button to help the YouTube algorithm. See you next time.